Hi, Dan Paladin, bringing you another edition of the Mortgage Morsel. On this episode, I wanted to talk about some credit myths, if you will, the truth and not so much the truth. Credit scoring used for pre-employment screening, myth. Credit scores are not used and have never been used by employers for screening purposes. Employers don't have access to credit scores. They can review credit reports with, of course, permission, but they're not going to see the scores. Myth number 2, spread balances to increase scores. No. Truth. Spreading out credit balances over multiple cards can actually have a negative impact on credit scores. Credit scoring models like FICO and VantageScore use a variety of factors to determine scores. Myth number 3, you only have 3 credit scores. Truth. Despite what you may have heard or read, you actually have significantly more than 3 credit scores. You actually have closer to like 80 scores when you consider all the different FICO and VantageScore credit scoring models, variations that are commonly used by lenders. With regard to mortgage, a FICO model related to mortgage is used as, say, an insurance company might pull. So they'd be different. Algorithms are different. Myth number 4, value of account age lost when credit closed, a credit card closed. Closing a credit card account does not cause you to lose the value for the age of the account. Credit scoring models will consider the age of closed accounts when calculating your credit score as long as they still are on your credit report. Closed cards can even continue to age after they have been closed. Closing an account can have a negative effect on your score, mainly due to credit limit ratios. The debt to credit limit ratio, if you will. Myth number 5, credit scores reward you for debt. Truth. Credit scores significantly reward consumers who carry zero or little debt. And scoring models do punish consumers with too much debt. So this is just some insight to credit myths, and there is more details than I could share in this episode. So with that being said, this is a wrap for this episode, and I'll see you next time on the Mortgage Morsel. And remember, if you're working, this guy's working.